Good morning, everybody. Hope you had a good weekend. Looking forward to the week ahead. So if we look at what happened in the markets last week, we saw another steady increase in the value across most indices. We saw the Dow Jones up 0.6%, the Nasdaq was up 1.1%, the FTSE was up 0.9%. The Nikkei did fall off 1.8% during the week, but I see those falls have already been made up today, and we're in positive territory. It was down 1.8% last week, and the DAX in Germany was up 0.3%. Had you put your money in the bundle of four last week, you'd have seen a 1.5% increase. You know, it's one of my great philosophies that you own Amazon, you own Google, you own Microsoft, you own Facebook, and by investing in those four shares alone, you're likely to outperform the market. It's happened again, 1.5 versus 1.1. And I'll go on to talk about Facebook again a little later on in this briefing. On the currency side of things, when you look at the week as a whole, we saw a pretty flat week. We saw the sterling dollar finish at 131, pretty much where it started. We did see it up at 133, but when the interest rate cut happened, we saw it come back down a little bit. We saw the euro stay at 111, albeit, again, a little bit of volatility during the week, but not a great deal of movement when you look at the bigger picture. The Japanese yen, 102, once again, started the week at 102, pretty much finished there. One of the only currencies to see a little bit of movement on the week was the Australian dollar. We saw the US dollar improve against that, so you're getting just over 76 cents right now. Of course, with the interest rate cut last week, we've hit an all-time low in Bank of England base rate. What does that mean for people? Well, of course, if you've got a mortgage over there, it's good news. If you've got a fixed mortgage, for many people, savings, I said it before, 0.25%, 0.5%, it's not going to make a huge amount of difference at the end of the day. We are in a zero interest rate environment for the foreseeable future. You need to find other ways to make your money work rather than keep it in the bank. And I think that the drop in interest rates, albeit is not good in that it's the lowest it's ever been. At the same time, this is what it is right now. You won't get anything for cash. One important factor to think of, though, is that pensions. The annuity. A lot of my clients are British guys who have pensions which have been moved into QROPs, or even if you are still in Britain for that matter, your annuity that you draw down on is based on the Bank of England base rate, the maximum you're allowed to take. So therefore, of course, this will have fallen. So it's important that you plan around that. Make sure you've got enough in place to enjoy your retirement comfortably. I mentioned before that I was going to talk about Facebook a little bit, and I know a lot of people out there of a certain generation, don't understand it and don't like Facebook, but you can't deny it. Jim Cramer, the Motor Mouth, and on CNBC, and one of the fine investment experts out there, he called the company on a different level to anything else he's ever seen earlier in the month. I mean, it's an incredible company, really. If you look at the stats alone, in the last 3 months, it's gained 100 million users. That's the equivalent of the population of Spain and England signing up to Facebook in the last 3 months. 18 to 24-year-olds, 50% of them, not Facebook users, 50% of all 18 to 24-year-olds in the world, the first thing they do in the morning is wake up and look at their Facebook. Startling statistics, and this is why Cramer sees it at 160. It's trading about 125 now. Again, you've got to have that stock in your portfolio. So on the sporting front, we have the Olympics started, which was fantastic. Always wonderful to be able to sit down and enjoy sports which you wouldn't normally watch. I was just able to watch Adam Peaky win the 100-metre breaststroke, which is fantastic. The first gold for Team GB. And long may it continue. The Premier League also starts next week. I just had a quick look at the odds out of interest. After last year's 5,000 to 1 winner of Leicester, there wasn't a single team out there who was at odds anything like that. In fact, the longest odds you get on any team was 1,500 to 1. So perhaps the bookies may have learned a little bit from last year. So to finish with a quote, I'm just going to finish with an oldie but a goodie, and it's by your man who sits in your $100 bills, Benjamin Franklin, and one of his famous quotes was, "An investment in knowledge pays the best interest." Very simple, but it's a fact. And in a world right now where the banks aren't going to pay you interest, you need to find other ways to be able to maximise your hard-earned funds. You've all worked hard for your money. It shouldn't sit there earning nothing in the bank. You need to get it working for you. So please, come and see me. Enjoy your week. Cheers, bye.